Welcome to the Trust Us, We're Professionals podcast with your friends from SSC, CPAs, and advisors. This is the podcast where we break down financial matters found in pop culture, the world, the universe, the ether. Basically, we make complicated financial matters more consumable for the general public. We are all licensed professionals here. I'm Chris Underwood. My name is Chris Underwood, a licensed financial advisor with SSC Wealth, and I am so thrilled that I can't even pronounce my last name, to be joined by Michelle Hammond and Chris Cohart, who have lots of licenses as well. Michelle, Chris, thank you for being here. Chris, tell us a little bit about your licenses.
My name's Chris Cohart with SS&C CPAs and Advisors. I'm a senior manager, but I also am a CPA and a CEPA, which is a Certified Exit Planner as well, which has some relevance to the topic at hand here.
Which is why we definitely had you part of this. Absolutely.
Possibly.
I'm Michelle Hammond. I'm a Chief Strategy Officer for SSC, CPAs and Advisors. And, we're going to be talking a bit today about estate planning and the value of things. So you guys said I could come because I'm a certified valuation analyst. So I know very little about tax. And I say that and I sign lots and lots of tax returns, but that is not that's another reason that Chris is here, because he's going to talk about some of those implications as well.
For today's episode, our fourth, we're going to be discussing the Rian Johnson movie, Knives Out, the impact of estate planning, celebrity estates. We're going to play a game. We're going to have lots of good stuff on this, okay? For those of you who have not seen it, I highly recommend it. It has an awesome cast led by James Bond, Daniel Craig. He's using a very natural-sounding Southern accent in the movie Benoit Blanc. Just for a quick synopsis, for those of you who have not seen it, it's a murder mystery revolved around the death or murder... That's my Keith Morrison Dateline voice of the family patriarch, a famous author named Harlan Thrombey, played by the late, great Christopher Plummer, and the subsequent family infighting over the contents of his will and estate. So that's the background to Knives Out. If you haven't seen it, very good. Go see it if you have not. Now, I know the answer to this question, because here we are recording a podcast. But Chris, Michelle, have you both seen Knives Out? When you were watching it, if you've seen it, what was going through your CPA brains?
I think it's a legitimate question, because on our first podcast, we knew what we were going to be talking about. And I said, who's seen the Young Sheldon episode that we knew we were going to be talking about? And Chris is like, I didn't really see it, but I think I can make comment. So
Right.
Before we walked in here, I said, did you watch the damn movie?
I did.
Good boy.
I did. I actually, the first time I saw it, I was opposed to it. I think I saw it on my birthday 2 years ago. And I was like, sure, I'm not going to like this. No biggie. My wife and kids like, no, this is your type of movie. So I pouted my way to getting to it. And then I was like, that may be one of my favorite movies of all time.
It's really good.
I don't blame you for pouting, though. If it's your birthday, you should get to pick.
Maybe.
Maybe. I think that's the one time you get to pick.
No, his wife knows what's best for him, Chris. I mean, come on, you know this.
Okay.
Yep.
Fair enough. All right, let's talk about takeaways from the movie Knives Out as it relates to estate planning. This is your guys' expertise. Do you guys want to talk about kind of, the takeaways from the movie and if it was accurate, dumb, real, smart, all that good stuff?
Yeah, I mean, I had a client once that we went through this whole process. I had to go through this real fancy house, try to figure out who may have killed the patriarch. Yeah, I was absolutely something
Did you hire Benoit Blanc?
Yeah, I threw on my best Southern accent and went through the process. It didn't turn out as well as the movie, but
Was Chris Evans there?
Chris Cohart was there.
Oh, okay. Well, we can dissect that later.
I thought, it didn't have, when we were putting the topic together, the thought of estate planning and Knives Out, the movie is more about kind of a murder mystery than the true estate planning. But us being accountants, that's something where our brain naturally goes. I remember in college, one of my friends actually went on The Price is Right and won the entire thing. So the grand prize, whatever we call it. She got like a washing machine and a couple other things. I don't know, but I remember it saying to her, like, she's gonna have to pay tax on all of that. She's like, can you just not think about the tax consequences? Like, if I were her, I would sell the washing machine and pay the tax on everything else.
I think they give you an option, but it's only like 60 cents on the dollar for like the cash value of the prices.
Oh, is that right?
I think so. I read that somewhere, and that could be wrong though.
So going back, it's hard to turn the brain off of what could have been from a tax perspective or from an estate planning perspective that they could have done to save themselves all of this rigmarole that this movie was. It wouldn't have been as good a movie. They would have just said, hey, we did all the right planning and here's the will, movie over.
Everyone gets equal shares.
Right? This reading of the will, the gathering of the family, sitting there with bated breath, finding out what did my loved one think of me? How did they want to treat me in their final moments after they've exited? I don't see that a lot, but we see a whole bunch of other pieces as it relates to didn't have a will, hadn't updated a will. And I thought that this one was incredibly interesting because there was also that component of a family business kind of baked in through this with his publishing company and the rights and who was going to do and who would take care of the business after Harlan was gone. So I thought that was also something that wasn't actually addressed in the movie. Maybe it's in that expensive sequel that they're going to make. Two sequels.
Netflix ponied up $400 million for 2 sequels to Knives Out. So
I have questions.
So we have 2 more podcasts after that?
Well,
2 more podcasts.
Right.
So
one every 4 years.
Yeah. Only if there's a Knives Out sequel. Yeah. So there'll be more Benoit Blanc in the future.
And Chris Evans?
I'm pretty sure he's in jail after the first one.
Oh, well, all right. Fair enough.
So my first big takeaway from this was how messy families are. It doesn't matter whose family it is. There's messiness involved all the time, especially when there's a family business and there's money involved. Things just tend to get messier.
Absolutely. Incredibly messy. Sprinkle in emotions from the trauma and the change. Sprinkle in history from everything that they've experienced, and then factor in no planning and surprises. It's the worst situation that you could end up in at the death of a loved one.
Yeah, it kind of almost feels like, I guess he was a celebrity in the movie, but celebrity estates just get messy in general, just because there's so much money at stake.
Right. I think when we talked about it, one of the more messy ones, I think that kind of not similar, but is definitely messy is the Anna Nicole Smith and the, what was that, Howard Marshall estate, or not the estate, but their marriage, and he didn't include her in the.
It's just when somebody's completely cut out, because that's what they did in Knives Out, right? Everybody else was cut out, none, not even $20, right, to go through this, and I think Anna's husband, 89-year-old husband, didn't update his will to put her in it. So was the intention to cut her out, or was it that he just never got around to it? Because I think he lived a shining 11 months or 15 months or something ridiculous, after their marriage. So it's.
I mean, according to her, they were soulmates, though.
They were. They absolutely were.
Yeah, he would have updated the will if he could figure out how to, sign into AOL.
But the messiness of that, of not including it, and then you have other family members that may show up. It didn't happen in Knives Out, but in the Anna Nicole Smith, we had another sibling that wasn't, or child that wasn't included in the will as well. So they challenged the will. And even is it settled today? I know Anna Nicole then passed away, then
the other kid passed away.
The other case. So then the estates were, both the estates were suing each other.
Do you know who won in this one, Chris?
Oh, all the attorneys.
Oh, the attorneys.
Yeah.
Yeah. I mean, that's who really won. And it can be avoided.
Right.
It can be avoided with discussion and planning and hard discussions, though, right? Like you're pre-talking about your ultimate demise with your family and going through those things, but it's messy.
Right.
But I think it's kind of what you need to do for your loved ones so that they know what happens when you pass.
When it feels like a lot of celebrities don't even have, like, no will, nothing, no estate planning, nothing, right?
Yeah, I think that's a good segue into the next takeaway, that planning can save a lot of pain and agony.
Yeah.
And part of it is helping that messiness of the family. It's going to be hard regardless of how much planning you have, but if there's no planning up to this point, you end up seeing a Knives Out situation.
Surprise!
Hey, surprise! Here's what we have. Somebody else that has cared for me is getting everything, and you guys are all out.
Oh my gosh, we had and for small business owners, it's not just figuring out who gets the cat, right? You got to be able to transition your business to somebody else in your absence and make sure that there's enough money for the your remaining family to be able to live off of it. I was helping a client here last year as part of what we do, getting ready for estate planning, start going through all of his documents, right? So we're going through his original LLC operating agreement. And in that agreement is where it spells out, if I die, what happens to my shares? Well, it listed a name of somebody we've never heard of before, ever. It listed a name of somebody in Kansas that we had never heard of before, and that was what was filed with the Secretary of State as how it was to be transferred. Because I'm sure, as many small business owners do, they went online and found a template for an LLC operating agreement and did find and replace. And they didn't replace one important word, one important name. So we've got that fixed, but that's planning. That's the stuff that needs to happen in advance.
Yeah, and I think the most famous non-planning, at least in my opinion, is the Prince estate.
It's crazy.
And that estate where he had no will. Now, Prince isn't alone. 60% of all Americans do
60%?
not have a will, which is not a good thing.
Yeah.
That there's no planning in 60% of the population. Now, Prince's obviously is a little bit bigger estate, but what that does is just opens it up to the probate courts, and the probate courts end up making the decisions on a lot of the payouts, and they follow kind of the standard laws in that given state as how those funds are being distributed out. But you definitely open yourself up for a lot more scrutiny. People come from all over the place to say, I know with Prince's there was a lot of children that came forward with their hands raised and hands out of, yes, I'm Prince's child.
Absolutely. Me too.
Yeah. and to this day, I don't believe that estate is settled.
I don't think so.
No, and he wasn't married, and he didn't have any known children, so that makes it even more complicated.
Except for me.
Michelle does do an amazing acoustic Purple Rain, if anyone ever wants to hear it.
Absolutely. PJ, turn it up.
Yeah.
This is the time.
This is the time.
But I think the takeaway here is planning, having those tough conversations, but also, I mean, this isn't something you really want to do yourself. You want to have a team of advisors to kind of guide you through the process, because otherwise it's going to be some random name in Kansas that, it's going to take forever to figure out how to make that work, as opposed to having somewhat of a seamless transition. It can be a lot more complicated than it needs to be.
Absolutely.
Yeah, I agree with that. I mean, that was another takeaway I had for sure, which maybe they didn't have the greatest of trusted advisors in Knives Out, where they didn't have those hard conversations with the patriarch before his untimely death of how to make this transition. And I think to one of Michelle's points earlier about those family businesses is that individual ready to take on the business that they might have? And those are conversations that those advisors need to be having with those their clients about their estate plan.
Oh, yeah, they need clearly a good attorney to have as part of the team.
Mm-hmm.
You really want to have a good business consultant, somebody who also really knows the tax law and the estate law. You probably want to have your financial advisor as part of these meetings as well, because some of these risks and some of the estate tax burdens or the transfers of business can be addressed through careful cash flow planning and then life insurance policies that can be procured to take care of some of these things. So building your team of advisors. So, having that team with you. And then when you look at the team, it's not just the licenses, it's the personalities of the people that you choose to be on your team. Are they willing to ask you the hard questions? And are they the type of people that you want to have shepherd your family through this after your ultimate exit? Because I think setting them up financially is great, but setting them up with a team that can help them keep the money, keep it going, and live through the intent of the person that passed, I think is really important.
Speaking of the intent of someone that has passed,
yes.
You remember the Michael Jackson
Did he have any intent?
I'm sure he had. Well, he had intent that he created a trust
with
his attorneys,
mm-hmm.
but they never funded the trust. So
close.
So close.
I got a really good idea that I'm going to half execute for you, cohort.
Right. Yeah,
I
so-
could do this now, or I could wait till tomorrow. We'll wait till tomorrow.
So setting up a trust that's not the end of the day.
Right. Yeah. I mean, we had the idea. That doesn't mean that it's been executed fully. Correct. Yes. We have to take the next steps, and that having those trusted advisors to help you along those processes. Those are hard decisions. What does funding a trust actually mean?
Oh my gosh.
And that, I think that's a big complex thought for most individuals. Yeah, I got to trust, but really, what does that mean?
We have so many clients that just have trust with nothing in them.
Yeah,
you know,
absolutely.
because you have to take the time. If you want your house in your trust, you have to go down and retitle your house.
Right.
Right. You want your car in the trust. You want your investments in the trust. It's work. And then it's not just like one and done, you know, like Michael Jackson was one and not even. You have to check every year to see if what new bank accounts you opened, what things might be outside of that trust. And so it's perpetual. It's not.
And the downside
static.
of not getting that into the trust is
Probate.
again, it ends up back in probate. And your intentions, your desires of how your estate would be run is no longer in your hands, or how that trust would be used thereafter is no longer in your hands.
Probate.
Yep. And I mean, it's just, again, you know, planning, communication, having a team of advisors. You want to, if you have specific wishes after you pass on, you want to avoid probate, right?
Yeah.
Ideally.
Ideally. I mean, I don't think it's a bad process, but it just opens up the information even further to interpretation, right? Of what your actual intentions were, and then always updating it. I think Chris and I were talking about Heath Ledger. He had one. He had a will, right?
Yeah, he had it all set up,
But
he forgot to include his 3-year-old daughter because he hadn't
So close.
updated his will after the birth of his child.
yeah, it worked out okay for him though.
This is be the exception and not the rule when money is involved with family. Is yes, in Heath Ledger's situation, the family, because his parents and his 3 sisters were the ones that actually ended up with the inheritance. They made it right by giving his estate to his daughter. But like I said, I think that's the exception and not the rule.
Mm-hmm.
People are greedy. They get their hands on money. They often don't want to give it back.
The other thing that there's a lot of common theme to what we're saying, which is all the planning and having good advisors, and what kind of pieces all of that together is good communication.
Absolutely.
Really good communication. It's not just between myself and my family, but it is my advisors and myself, my advisors and my family members. I mean, there's communication that has to happen across the board.
Yep.
I like this quote from, and I found this quote, and it implies as if I'm some very intellectual person because it's from an Irish playwright, George Bernard Shaw. I've never seen any.
You're
Irish.
always quoting Gaelic things to me.
Yeah, maybe. But he said the single biggest problem with communication is the illusion that it has taken place. And I think that's where a lot of this estate planning ends up happening, is that there's this illusion that somebody knows about that. Somebody else is dealing with that. Somebody else has taken care of funding Michael Jackson's trust because he didn't want to do it. Or someone is taking care of putting Heath Ledger's daughter in the will. Or thinking about it. It may be even just thinking about it of, hey, I know something changed. When we're doing a tax return, they had a new kiddo. If we're looking at the big picture of, hey, they just had a new kid, maybe we need to have a conversation about, have they updated their estate? Have they updated their will? Have they done all this work afterwards? Or they bought a new house. They sold their old house and bought a new house. Did they put the new house back in their trust the way that they wanted it to be?
You have a trust that I have been filing zeros for the last 5 years. Like, put something in it.
Right.
Put something in it. Absolutely.
Or they change financial advisors as well. I mean, like you
Yeah,
said
it
earlier.
happens.
When, especially as your parents get older, I think that you really need to know like what's where, and you know where to find it, and you know if you have an obscure coin collection or accounts, whatever it may be, you need to know that. I mean, because it gets messy if you have to try to figure it out or find it or whatever.
Absolutely. I saw on 60 Minutes last week because, I'm old. I watch 60 Minutes. At least we're old.
Yeah, maybe in a few months I'll
I'm younger than both of you. I'm still a strapping young man.
I'll have to lay out the dates on this a little bit better. But they were talking about Prince and his estate and that it still wasn't settled. And that he had these vaults in his house. They were just full of music. And eventually he had stopped going in there and he started using a whole nother space in his house to start putting all of his music. And everybody was perplexed as to why. What was in there? Why did he stop going in that room? It was nothing. He forgot the code. He forgot the code.
Right.
I mean,
That sounds like a communication issue.
I mean, it sounds like me perpetually as it relates to trying to get into a computer. Forgot my password.
That's true.
There's gonna be new Prince CDs, new Prince albums.
Albums.
For I know that ages me. That ages
oh,
me.
you're watching 60
Yeah.
Minutes
There's
too,
gonna be new
buddy.
Prince. Yeah, there's gonna be new Prince laser discs. No, but there's gonna be new Prince albums for till the year 3000.
Absolutely.
I mean, yeah.
Lucky us.
Lucky us.
Yeah.
That also reminds me
Yeah.
of the estate for, I forgot her name. What is her name?
Flojo.
Oh yeah, Florence Griffin Joyner.
Flojo.
She had everything done,
Yeah,
but no one had any idea where it was.
it's cool. Safe.
So just like Prince, she just didn't go back in the vault 'cause she didn't know where the code was.
Didn't know where the code was.
So it's great that she had it all, but she didn't communicate with her family where it
last
is.
step.
Yeah.
That last.
It seems to be a common theme on a lot of this, like you're just almost there. And so much of estate planning is pushing through the hard parts and getting all the way through.
But making sure that you have a team around you to guide you through this, because like you said, a lot of people might think that, oh, I did this correctly, but they didn't. You know?
Right.
Thank you. That was my contribution to the podcast.
And I think the biggest thing, maybe not the biggest, I think the planning all this is biggest, but the thing that people hate the most of the estate planning, that they're scared of the most, taxes.
Nope.
Taxes. And it used to be the idea of estate taxes was only for the rich, right? Like you had to be pretty wealthy for estate tax. Okay, so explain the estate tax, Chris, because to me that'd be nice. One more time, slow for the CPA. So an estate tax is not an income tax. It's not a sales tax. And it only happens
Oh, it just happens at the end.
at the end.
It happens at the end. It's a wealth tax, kind of a wealth tax,
Yeah.
to where we then take all the assets, everything that we own, everything that we've ever possessed, we put it in this big pot and say, how much is this? What do we own? What is our asset base? And then we say, the government wants 40% of that if our estate is over a certain amount.
Okay, so you're telling me that and I know this part because I did evaluation. As of the date of death,
As of the date of death,
they look around and they
Correct.
say, what is your house, your car, your coin collection,
right?
Your
My-
farm.
My Beanie Baby collection.
your Beanie Baby collect? That still hasn't hit. Your farm,
farm, yeah.
my land,
My
my
land.
business,
yeah.
my life insurance policies.
My IRAs,
Oh crap! So it's not just what you have in your bank account; it's
Right.
everything.
right?
Okay, and then write a check for 40% to the
Uncle
government.
Sam. Uncle Sam wants 40%.
This is now dipping your toes into the wealth management part, which I'm a financial advisor, and I think the point here is there are legal ways to minimize that tax burden at the end if you just properly plan and you have a good team of advisors around you.
That's estate planning at its finest.
That is estate.
Not just for transfer, but for transferring the most you humanly possibly can.
Right.
I mean, our discussions are give it to charity before we're giving it to the government, right?
Correct.
Let's fund your charitable intent as opposed to giving it to Uncle Sam, right?
And I think a lot of people get confused on the difference between the estate tax and inheritance tax. They view, I'm going to have to pay tax on everything that I get. In reality, that's not the case. You're going to end up paying tax maybe on an IRA that you get when you take the money out. But all that tax is happening at the estate level before it even gets to you. Now, are you indirectly paying a bunch of tax? Absolutely. But you're not per se paying the tax if you get that investment account and then sell that investment. That's not really what's going to happen. It's going to happen at the estate level.
Absolutely. And this is not a political show. We're not getting into politics. No politics. We're just talking
Is this a
about
hint?
laws. Just laws. Okay?
Okay.
just don't want anyone to get upset on the other end. The 4 listeners don't
Oh, I
want
thought
to
you
get
were talking
upset.
to me directly.
No,
okay.
not you. No, I was just saying this is politics is a very, everything's very sensitive right now, so this isn't a political thing. But let's talk about President Joe Biden's estate tax, the proposed changes, the changes he's discussing.
Just made me, I just lost my breath a little bit here. Just the changes to the proposed
talking about
change.
politics. I
Yeah,
said
no,
that
no.
set the stage too much.
No, the proposed changes to the estate tax.
Like, we don't talk about estate taxes a lot because right now,
Yeah.
as of today, if you're married, you can have an estate of up to,
It's 22.5-ish million, depending
Okay.
on based off of, changing of COLA and what have you.
so before you're going to have to start paying taxes, you look at your estate, you're at 10 million. Right now, you're golden.
We're good.
Right. But because it's usually over about 20 million. We'll start planning at 15 million, maybe
Right.
even 10 million because things change and you're going to grow your assets. But right now you look 22 million. You're not going to be paying that 40% tax that we just talked about. But it has not always been this $22 million number.
Tell us how it was in the olden days.
I don't know. I wasn't doing taxes. What was it, Chris?
It was not as generous as it is now. How about that?
And what are they talking about taking it back to?
All right. So to make the point, so right now the 22.5 million is really when you're married and you have a spouse and you have
Yeah.
portability between the spouses upon one spouse's death. Right now, it's 11.7 for a single individual to get to Michelle's point. What they're potentially talking about, and these are just proposals. There isn't anything definitive. They haven't negotiated this between the House and the Senate at all. This is just a preliminary proposal from Biden's team that we would increase the 40% to 45%. Doesn't seem like a lot, but 5% of 11 million is pretty big number.
Let me
Pretty
get on
big
my
number.
phone.
It's abacus time.
All right. The next big thing, which I think is probably a bigger issue than the tax rate, 5% is absolutely a big jump. It's absolutely a big jump. Is decreasing that 11.7 number per person, the lifetime exclusion, down to 5.3. That's the proposal. There's actually been talk about having that at a lower number than 5.3. That's a huge change.
It's a huge change.
That puts so many more people into this pot of potential estate tax of paying 45% of everything that they've accumulated over their life to the government.
It's a huge change.
Mm-hmm.
And if you think about how you could get to 5 million fairly quickly with your house, your cars, your farm, the value of your business. Wait a minute. I'd have to sell my business to pay the taxes.
The
Right?
Beanie Baby collection.
Yeah, absolutely. That whole back room at Chris's house.
That makes him
Beanie
sound very
Babies.
creepy, just so you know.
So creepy.
There's a whole back room.
They'll be worth it one day.
Someday, babe. But like, guys, it's a really big deal. 5 million isn't a crazy number. I mean, Chris, how much was your house in California?
Yeah.
Right?
Yeah.
Like, seriously, that's you add that in there, right? And
Right.
so I feel like that, and here's the thing, is it's not an outrageous number, and we've been there before.
Right.
This isn't this it was this low before the 2017
Correct.
tax
Yeah,
changes.
the 5.3 is the 27 pre
2017. So they're just talking about rolling back what had happened and increasing the rate. But I really think that it's going to impact a lot more people. And then there's this third thing, Chris.
Oh, yes.
This is my favorite
the
part.
third one, which is up to this point, we're at 11.7. It's great. No one's really paying any tax because we have this top number. But they're talking about removing the step up in basis for everybody that inherits those assets, which that doesn't sound too scary.
Yeah, will you touch on that though for just,
Like step up in basis.
John and Jan Smith, who don't know, have no clue what that
That
means.
sounds like an 80s dance move.
It does.
Like step up in basis.
Or like a New Kids song.
New Kids in Song. Yeah,
Right.
yeah.
They had a song that was like step something, right? Step to step? No. That's a sitcom.
I'll work on it. Go ahead, Chris.
never mind.
Explain step up and basis, please.
So the best way that I always explain this to individuals is my grandparents were smart, a lot smarter than me, and they bought Apple at $1 a share when it first came out.
Oh,
Like, this is
gosh.
going to be huge. This is going to be huge. And they pass away, and I get this Apple stock. Well, now it's trading at, I don't even, what is Apple now? Over $100 a share after
It was 134 today.
134. And that's after multiple splits.
Yeah, multiple splits.
Of all these years, multiple splits. So they probably have 20 times the number of shares that they had before over these years. So there's a good chance that there is a huge gain on all these on this share that I received from my grandparents. And then I would, in theory, have to pay tax on that. But we have this glamorous thing called step up in basis that up to the date of death, that becomes my cost basis as the inheritor. I now don't have to pay all that tax that was embedded in that stock through all those years.
So when you turn around and sell it, if you sold it for the same price it was on the day that they died, you just get the money tax free.
Tax free.
Yep. Best case scenario.
I
Step
still
up
have
in
to report
basis.
it, but I have no gain on it.
Yeah.
But now they're saying, wait a minute, we're not going to do that any longer. We're proposing that gap between what they bought it for and what the fair market value was at the date of death is going to be taxed on their final tax return. And then they'll have to pay tax on it. And whatever is left, again, Michelle's point, I may have to sell the business to pay for the tax associated with this Apple stock sale. And then whatever's left will go to the beneficiaries.
So that's a lot of tax. That's the math on that. And there's whole strategies built upon leveraging the step up in basis
Right.
that will have to be readdressed. I am very confident that that won't make it through. That I'm being recorded, right, PJ? Okay. I know there's changes coming, and hopefully that's the one that hits the cutting room floor. I can't guarantee it, but I'm hopeful that would be the part that stays the way it is.
Yeah, I think we've seen over the years that the lifetime limit does change based off of who's in office, whether it's Democrat or Republican or split. Those tend to have a specific kind of guidance based off of who's in office. So I agree. I think most likely is that we do see a reduction, which means we need to have a lot of planning. But I think that step up in basis issue probably won't get there. But that's purely speculation. Maybe it doesn't even get proposed because someone looks at that when it actually has to come into law and like, whoa, hold on a second. This is crazy talk. We can't do both lower the limit and get rid of the step up in
I'm
basis.
assuming that those lawmakers look around and see how much it costs them personally, and then this won't go through.
Yeah. And it might just be a negotiation tactic too. Like, I'm going to throw
Yeah.
this in there too, and it'll be the first thing I'll remove to make it look like I'm negotiating good faith.
It could be really bad.
Right. So some of the things that we've done in the last 10 to 15 years, maybe not quite that far back, but the last 5 years, 10 years, those estate plans probably aren't going to be valid estate plans if these significant changes occur.
That's interesting. What would happen? So they changed the laws significantly, but these were planned out under old laws. I mean, does that end up in probate?
Well, it depends on if somebody actually passes. What we would want to be saying is those don't work any longer. So we need to be active participants in our estate plan. We can't be static with our estate plan. We want to be able to say, yes, we added another kiddo. We just had another baby, our third or fourth baby. So we need to change our estate plan. Maybe that changes how we distribute that fund. Maybe we now need an irrevocable trust. Maybe we have a revocable trust. Maybe we have more life insurance. But all that has to change. Tax laws are changing. So maybe we need to relook at our estate and say, yeah, these revocable trusts that we currently have that are great because the estate tax is at $11.7 million per person don't work at 5.3. So what is our other options? Maybe we have to go into an irrevocable trust as opposed to a revocable trust.
We look at all the different charitable trust options. There's a
Right.
whole bunch. Maybe, just maybe, if we didn't put people to sleep talking about estate planning today, you can have Chris and I come back and talk about trusts and
yeah.
some of the tools that we can use to help make sure our clients' intentions are executed, even after they're gone.
Sounds good to me. All right. Well, on that note, like we like to do in every episode of Trust Us, We're Professionals, should we play a little game?
Yes.
So this game is called Guess That Estate Tax Bill under current law, net of estate administration expenses. So if we're ready, all right, here we go. Does everyone have their abacus? Do you need a piece of paper?
I got my fingers handy.
Sure, I'm good. Don't worry about me. I'll watch Chris.
Okay. So we have $1 million in cash and investments, $4 million in retirement funds. I feel like we're just waiting for people to start shouting out numbers like The Price is Right.
PJ's keeping a rolling total over there for me.
$500,000 in real estate and $250,000 in personal property. So Chris, Michelle, PJ, you're playing now too. Guess that estate tax bill.
This is I assume that we are talking about a single individual in every one of the scenarios.
Whew. Thanks for answering me.
Yes. So we're going to assume single individual. I'm seeing $5.75 million in estate assets.
What's the exemption again?
11.7.
But you said they're single.
They're single.
Oh, that's right. So they get all of that.
They get, I say, estate tax bill of
0.
However, should the bill change like we talked about, they would have a bill.
Yep.
They potentially
So
would
under
have.
current law of 5.7, no tax.
Right.
All right.
The stipulation on this is there are retirement funds. So the estate is 0, but the retirement funds most likely, maybe they have some Roth IRAs in there. Who knows?
That'd be a big Roth.
There's still some tax to it, just won't be estate tax.
It's,
Yeah,
it's
estate-
deferred tax.
Yeah,
There you
the
go.
estate tax is 0. Those beneficiaries may still have something when they want
It's
to
not
pull
all
out
free
that.
money, kids. when
Once
you
they
get your
start pulling from the
5.7.
traditional IRA, they're going to have to pay taxes on it.
Yep.
Yeah.
Yep. All right.
But the estate is free and clear.
All right. Fair enough. What do we got next?
All right.
I'll do this math
Option
myself.
B. Guess that estate tax bill. $200,000 in cash and investments, $2 million in retirement funds, $400,000 in real estate, $150,000 in personal property / Beanie Baby collections, and a $2.5 million life insurance policy. Guess that estate tax bill.
So my kids learned this thing about how you can use reasonable estimating. That's all. You add that up, less than 11 million. So we're cool, right?
We're all
So it's Zipso.
yeah.
Nothing.
I'm saying less than $1 million, and this is 0. I think the interesting piece on this that I don't think a lot of people consider
Yeah,
is the life insurance policy.
that's right.
That thing's sitting out there in the ether that I pay premiums on every year, and then at the end, my family gets $2.5 million, and that does have to be included in the estate.
But there's some tricks we can do to help you with that.
Legal tricks.
Legal tricks. It's a trust thing. Not trust me. I'm a professional. Like it's a trust. It's an insurance trust. Okay, go ahead.
But we want people to trust us with their trust.
Right. Absolutely.
Yes. Trust us with it.
Podcast
Yeah.
12.
There
I
we
hear
go.
it now.
Okay. Number 3, $500,000 in cash and investments, $8 million in retirement funds,
Woo.
$750,000 in real estate, $750,000 in personal property. They must like, vintage cars or, who knows. And $4 million in life insurance. Guess that estate tax bill.
Is that 14 million?
That's $14 million.
Woohoo! Big
14
PJ.
million. So, and we get our
BJ's a
exemption.
doctor, just so.
We get our exemption 11.7,
Okay, so that leaves like
2.3
2.3
million
times 40.
times 40 is $920,000.
Whew. What are you going to do? I guess you could use some of the life insurance proceeds to pay for that. They still have pretty good money left.
They do.
Yeah.
But that's a big tax bill. Nobody wants to write 920
No, I get
when
it.
we could have planned it down and left some of that to charity,
Absolutely.
right? And done this in a different way, or gifted it to our kids in advance. Use the gift exclusion, the annual gift exclusion, for as many people as you feel like gifting to.
Yeah, and just
And,
do
yeah.
it year after year after year.
Yeah, I think you could have. I think you could have knocked this bad boy down by 2 million, the whole estate, to avoid that 920.
I agree. I think that their assets are significant enough that I think there was probably some charitable remainder trusts,
Yeah.
some cruts that we possibly could have utilized, because we weren't dealing with a big number. I mean, 14 million is a big estate, 900,000 is a big tax bill, but if we would have just looked at a way to divert 2.5 million maybe into a charitable vehicle
Yeah.
where they were still getting some investment income throughout their life, then we could have avoided a $920,000 tax bill.
Yeah. Plan. Have a team of advisors around you. Communicate. Take it seriously. Thank you, Chris. Thank you, Michelle. Very good stuff. That's it for today's episode of the Trust Us, We're Professionals podcast, brought to you by all of us at SSC CPAs and Advisors. If you ever have any financial questions, you can always reach out through our website, www.ssccpas.com. Once again, that's www.ssccpas.com. Any pearls of wisdom before we sign off?
I like the communication. I think that solves a lot of problems, and make sure you're doing it.
Yeah.
What do I always tell you, Chris? In the absence of communication, people write their own narrative. So communicate. Get it out there.
Wow, I'm going to have to go think about that one for a while.
It's deep.
It is deep. It's actually good. I love it. Great stuff, everyone. Thank you, Michelle. Thank you, Chris. That's it for today's episode of the Trust Us, We're Professionals podcast, brought to you by all of us at SSC CPAs and Advisors. If you ever have any financial questions or if you want to talk about Knives Out, you can always reach out through our website, www.ssccpas.com. Once again, that's www.ssccpas.com. Thank you very much for listening. See you next time. This podcast was recorded and is being made available by SSC Solutions, Inc., together with its affiliates and its employees, SSC, solely for informational purposes. SSC is not providing or undertaking to provide any financial, economic, legal, accounting, tax, or any other advice in or by virtue of this podcast. The information, statements, comments, views, and opinions provided in this podcast are general in nature, and such information, statements, comments, views, and opinions in the receipt of this podcast by any listener are not intended to be and should not be construed as the provision of investment advice by SSC, that listener, or generally, and do not result in any listener being considered a client or customer of SSC. The information, statements, comments, views, and opinions expressed in this podcast do not constitute and should not be construed as an offer to buy or sell any securities or to make any investment course of action. The information, statements, comments, views, and opinions expressed or provided in this podcast, including by speakers who are not officers, employees, or agents of SSC, are not necessarily those of SSC and may not be current. SSC does not make any representation or warranty as to the accuracy or completeness of any of the information, statements, comments, views, or opinions contained in this podcast, and any liability thereof, including in respect of direct, indirect, or consequential loss or damage of any kind whatsoever, is expressly disclaimed. SSC does not undertake any obligation whatsoever to provide any form of update, amendment, change, or correction to any of this information, statements, comments, views, or opinions set forth in this podcast. No part of this podcast may, without SSC Solutions Inc.'s prior written consent, be reproduced, redistributed, published, copied, or duplicated in any form by any means.